Hey guys, thanks for joining today. We've got really a important thing that if you don't know now, you know, you got to know. If you are doing private deals, you're acting as a syndicator. Of course, you want to work with the IRA investors, those self-directed IRAs where they got a bunch of money just sitting there and it's got to go somewhere. And either people are deciding it's going in the stock market or it's going into alternatives. So today we're going to be talking to really the only place to go. Give a call over to um, I can't help it. I'm gonna butcher your name every single time. It is what it is. But we've got Steve Csobaji. Okay, I'm lying. I literally practiced with him about 20 times yesterday because I could not say it right. But I'm actually just going to bring up his email. So if you want to reach out to him, it is weird. He's a weird guy. Steve Csobaji, you're from Inspira Financial. And thanks so much for not absolutely hating me. Let's see if you don't mind. Can you tell us a little bit about yourself? And then we'll get deeper into how you help syndicators bring up.
Ooh, thank you for that kind introduction, Nate. I like to think as opposed to weird, it's unique, but I've been called worse too. Anyway, as Nate said, means
Your girlfriend.
what's that?
And that was from your ex-girlfriend.
And my wife, very often actually. Uh, my name is Steve Csobaji from Inspira Financial. I have a very long background in retirement planning. I've worked with a lot of actual retirement plans, corporate plans over the years, 401ks, 403bs, worked with a lot of clients getting up to retirement and going into retirement. A couple years ago, I started with Quest Trust Company, which was a Texas-based IRA custodian. Many of you may be familiar with, where we were purely just a self-directed IRA custodian. That was a new pivot for me, so it got me into the alternative asset field. Just about a year ago, we merged with Inspira Financial, where we are now much more than a simple self-directed IRA custodian. Inspira does things like traditional assets in addition to alternative assets. We do 1031 exchanges, fund custody. We do corporate HSA. So we're a broad, diverse financial services company, of which the self-directed is a portion. In terms of how we work with operators, it's a number of ways. We are a conduit of people who want to use retirement money in the alternative deals. That could literally be a piece of property, an Airbnb that you put in your IRA.
What do you say?
It'll more often syndications, multifamily, done through entity structure, which again could be multifamily, it could be car wash, it could be RV parks, which are becoming very big these days, self storage, oil and gas. And then there's private lending, where you can be like a hard money lender to an individual and that way be passive in the deal, but still have, depending on the type of asset that it is, if say it's real estate, take a lien position so you have some security with it, or any kind of collateral for that matter. So that's a brief synopsis of me and how I got here.
Well, sounds good. And then your company and the entire history of the world. Um, so no, but before, and I really want to dive into more the IRA, how those investments work, know really why people are doing them to understand. But I do want to tell a really quick, goofy story that literally happened 5 minutes ago, 7 minutes ago at this point, where I'm not going to lie to you. I'm at my home studio, and of course, I'm hanging out in the t-shirt and just okay, time to throw on that collar. And if Steve says that he's been dressed up nice all day long, he's lying as well. So, I go to in the closet, I'm like, "Oh, I've got nice dry cleaning. I'm gonna grab a new crisp shirt." And when I opened the bag, you know what? It was not only this nice crisp shirt, but I had a freshly pressed wife beater and freshly pressed basketball shorts, also that have been cleaned and returned from the dry cleaners. So I've never had such class when I'm gonna go shoot some hoops. So I just one of those goofy things that if it hasn't happened to you before, you're lucky. But the important part. I don't know if you are comfortable talking about kind of why people invest in IRAs. And I mean, everybody does it. That's their retirement savings. But there's a lot of kind of those tax benefits. I don't know if you want to talk about the tax benefits or can talk about those tax benefits. Love to kind of just put it out there.
Yeah.
But if you're not comfortable, I'll holler at the CPA.
Well, we don't offer tax, legal, or investment advice, so I'll stop short of anything that might be perceived as that. But the tax benefits are one of the obvious features that the IRA does allow for. And, the tax benefits come in a variety of ways. One common way is just deferral of gains. And it's a nice tool if you are coming out of that old 401k plan and don't want to pay taxes on that money by taking it directly. You can do what's called a direct rollover, shove it into the IRA. You're not penalized, you're not taxed. You keep the deferral on that money and keep it growing for the future. The other option is the Roth IRA, which is probably the most common IRA we see these days. People are paying the taxes up front, but the long-term benefit is that everything that comes out, not only what you put in and already paid taxes on, but the growth over time, which can be more significant than what you put in, you also get back tax-free.
And I just want to jump out there because absolutely everybody in the world, if you've got a traditional IRA, and if you can roll it over to a Roth, it just makes sense. But there is actually some income limits that if you make too much money, you can't even do a Roth IRA.
You can't contribute to the Roth, but you can do the conversion. So that's actually the interesting little thing they call the backdoor contribution, where you actually initially put the money in the traditional, which there's no income limitation on that. And then they just immediately pop it over into a Roth. So they're basically, even if you're Elon Musk, you can get an annual contribution into a Roth IRA.
Okay. And I'll be honest, I've got my traditional IRA and I have an old Roth IRA. I haven't contributed to the old Roth for decades at this point. But what you're telling me, and I didn't even know that, I can just do the rollovers, but not just to roll over what's there, but I can every year contribute more and just keep rolling it over.
You contribute to that traditional, and then you just convert it over to the Roth. Perfectly legal. Now, again, there may be a tax implication to doing so. Check with your CPA always before you do a conversion. Even if that was a non-deductible contribution, oddly enough, there still could be a tax implication to that, which is a little counterintuitive, which is why we always say, again, talk to a tax advisor before you do a conversion. They can tell you exactly what your liability may be, if there is any.
Guarantee there's taxes because it went into the traditional IRA tax free and you have to pay taxes before it goes in the Roth. So, but still, like, I know that I'm planning for retirement and I'm planning on massive growth in my IRA. And I'd rather have that tax free versus just the traditional model. Now, anybody that's been syndicating for a long time, they actually already know this stuff. For anybody that's newer, just getting into it or really haven't brought in those IRA, we call them qualified funds, qualified investors. Basically, there's a bunch of strings attached to it. And if you are earlier in your syndication, capital raising, fund management career, maybe you don't know about this, but you have to. No questions asked.
Yep.
But, that just kind of sets the stage a little bit. There's a bunch of other tax stuff. Talk to your CPA about it. Need to have it actually set up with a custodian. You can't go throw it in your own piggy bank. That's when you reach out to Steve at Inspira Financial. And, I'm just going to throw up your email. So anybody needs anything, steve.csobaji, the C is silent, at Inspire Financial.
It will be a test.
And I have failed it so many times.
Well, you bring up an interesting point, Nate. In a way, self-directed IRAs did the
Where you get back to your name and
circle back to that a few times, I'm sure.
done. Go ahead.
Self-directed is just a marketing term, because the IRAs are the same no matter where you go. In fact, I'd argue every IRA is self-directed because you get to choose where you put it, who you open it up with, you decide what you want to invest in. But yeah, the difference is the type of asset, and it is important where you do it because you can't go to a Schwab, you can't go to a Fidelity and do a true self-directed IRA that's going to invest in things like multifamily syndications. They don't deal in the realm of private assets. So that's why you need a company like Inspira. Interestingly, like I said before, and I don't want to come off like a commercial here, but we actually do dabble in the traditional assets too. So you actually can kind of go between both worlds with us, but you can't go with both worlds at a place like Schwab or Fidelity.
But can you make, what is it, Jillian's fries? What's that saying?
I'm not sure.
I don't know, whatever. Where they use the little like shaver thing.
Oh.
I don't know. That's grandma's cooking. So got it. But something that people may not understand, like, these funds have to be held by a qualified custodian. And as Steve was mentioning, I remember Charles Schwab actually used to allow some of these private investments. I think it's only been 15 years that they've stopped, and every major wirehouse has stopped allowing them as custodians. And if anybody doesn't know what a custodian actually means, Steve, can you explain what a custodian is in terms of IRAs?
Well, it's an IRS requirement that it be held by a custodian. So we're basically a third party. We administer the assets, and basically we do some of the tax filings. We do the record keeping. We make sure that everything is compliant with the IRS so they don't end up bothering you.
Is it actually like a registered company? Like, are you registered with the SEC or a state or
Well,
bank?
really not, because we actually don't sell the investments. That's the thing about it is, and that's really the crux of self-directing, is that you're coming to us, setting up the IRA, and we'll help you get it funded, but then you're telling us what to buy. So we're neutral in any and all of your transactions. We don't have a dog in that hunt. We have no conflict of interest. The only thing we might do is we will review forms and paperwork just to make sure there's nothing that's red letter prohibited. That's going to, again, get you afoul of the IRS sometime down the road.
I do have to just make mention because it honestly has happened before with other custodians that I've worked with, where they turn around and actually will promote investments to their investors, the account holders. And that's a serious issue, if you ask me, because the people that are setting up the accounts with you, these are the syndicators that are listening right now, and they're always afraid of just giving away an investor. Can you give me some double assurances? Because I've seen it before, and it's a problem. Y'all won't actually market other people's investments.
No, we don't. But what we do try to do is we want people to be aware of investment options. So we really do focus heavily on client education. One of the primary ways we do this is through webinars, and we will invite experts in the industry. That could be a multifamily operator. It could be somebody who specializes in private lending or somebody who specializes in rental properties. They will share their expertise, but they'll do it in an educational fashion. They're not pushing product. We vet the people, we vet the presentations to make sure of that. But of course, it then becomes a resource for an individual because it is how you might find the next deal. But again, it is incumbent on the individual to make sure they're doing their due diligence about whoever they're working with.
And just because I hear what you're saying, if you are an experienced fund manager and you do want to provide some education and you are working with self-directed IRAs, would you mind if they just reached out to you and maybe it makes sense to have an educational event?
Absolutely. I would welcome it very much. We're always looking for new content. We're always looking for a new spin that somebody has. Whether it's, again, sort of your experience. We've had people who've shared how they got started, people who like to do, little synopsis on the outlook. We've had a variety of different topics that have all been really well received. And this is something, this was a quest thing that we did with education. We brought it over to Inspira and they really have embraced it.
Got it. And full disclosure, I used to have my office in Dallas in the same building as Quest. I mean, it's been like 8 years plus since I was in that building, but definitely got to know you guys. Definitely got to do my own teaching your investors about how to protect their assets and how entities work, et cetera, et cetera, et cetera. So really a long-standing relationship with these guys. So full disclosure, they're awesome. So, but I would like to roll into something else because it is important for people to understand. And it's actually kind of a little bit of a wonky unknown. I even had to ask you a little bit more about that when we were getting a little bit more preps. Surprisingly, I actually do prep sometimes when I have these discussions. And you know, crowdfunding lawyers. That's what we're here on behalf of. Here, it's what we're. That's my law firm. And guys, if you're doing your syndications, if you are raising capital, if you're managing your own funds, raising capital for your own funds, you should definitely, well, 100% you need a securities attorney, and 200% it should be crowdfunding lawyers, but that is completely besides the point. But most of our clients nowadays, they're using investor portals. And these investor portals is like the deal. The investment will be available online. The capital raiser is driving traffic to here's where you get the pitch deck, here's where you get the investment documents, here's where you get grandma's cookies. Everything all in one place. There's I think there's some differences, and now I know there's some differences when somebody is investing through their self-directed IRA versus they're just writing a check or a wire out of their bank account. But Steve, if you don't mind just kind of talking through that a little bit more and how it may be different processing an investment.
Yeah. Typically, the procedure is that, again, the client comes in with the deal. They've got the private placement memo, they have the subscription agreement, and they do it through a portal with us. So they would submit the documents online, even upload them. We review it, and then we fund it. So this is an alternate method, as you said. But the one thing you said that's pretty important that I've learned is that not all the portals are the same. So even though you're doing it through this third source, it would behoove you to be in touch with us as the custodian because we still will need some kind of direction of investment from the client to tell us exactly what's going on. And sometimes those things don't come through from the portal. Like I said, when I was conferring with some of the people from our entities group, they're not all created equal. And so it can basically sometimes cause delays or, miscommunications if we don't have everything. And, it still is something, even though it's a more, you could say it's a more democratized approach, which lets the client do more. But anytime you're doing that, you can also be opening yourself up to some problems or some errors.
Okay. If you don't mind, I'm going to describe a investment process the way I understand it. Just yell stop, no, and don't if I say anything incorrect. So, all right, syndicator, raising capital for whatever fund or otherwise. They have an investment, they're running a marketing campaign, they're soliciting on social media, they're driving people to this website, and that's where they find all this information. Sometimes, and this won't apply to you, but sometimes if somebody's just going to invest out of their piggy bank, they fill out all the documentation right there. Oftentimes they just DocuSign right there. All the deposits are done directly, and it's 100% basically through the portal. And some of the portals you do have to download the documentation and fill out. I'm not a fan of those places. However, if somebody is trying to invest through their IRA, you actually have to download those documents.
Right.
You have to physically sign those documents and send it to to the investor's custodian, and the investment custodian, the IRA custodian, will review the documentation. That would be a subscription agreement. Does that include like the PPM and the operating agreement?
It's typically subscription agreement and PPM.
Okay. And if you approve, there's going to be a direction of investment that the investor will sign
Correct.
or the custodian telling Inspira, I want you to make this investment over. And then I remember there being like a medallion stamp or something like that. Am I remembering correctly or incorrectly? It's been a long time.
You pretty much have it. The medallion stamp isn't necessarily always required. That's something. It usually depends on sometimes the operator as to whether or not those things are required, but it's not necessarily a requirement of the investment.
Okay, that there is some signature somewhere.
Signature, right? Exactly, and even sometimes through our portal, that can just be done DocuSign. That's considered, as I understand it, it's legally binding. So, if you're doing it through a portal that you have access to, and you are the one who's confirmed as the user, then that usually does suffice.
Okay. But basically, investor fills out the paperwork, sends it to IRA custodian.
Right.
IRA custodian reviews everything. Investor signs something, says, hey, custodian, go ahead and make that investment. Custodian then sends the information to the portal issuer, and then will send the funds.
And send the funds wherever they're directed. And again, it's important to know we're not evaluating the deal. When we inspect the documents, we're merely making sure that everything is titled correctly in the name of the IRA. That's probably the biggest mistake people make, is they put it in their name, whereas it's really supposed to be in the name of the IRA. But we're also making sure there's nothing that is, as I said before, red letter prohibited. There's no kind of prohibited transaction that's visible that would constitute the IRS basically having a little chat with you by way of an audit.
Now, what are those prohibited transactions? I know what I know, but I don't know a lot.
It's basically, it precludes you from self-dealing in any way. So it's going to prevent you from transacting with yourself. So that might be more evidently come across in like a real estate transaction. You basically can't buy from yourself, from your spouse, from your parents, from your kids. Where it gets a little tricky is that you can't transact with entities that any of those people own or operate or would be compensated by. So one thing that's come up a little bit from time to time, which does require a little scrutiny, is if it's a privately held company. Just as an example, there was a bank that I was working with, and they were selling shares internally, and a lot of a lot of the employees wanted to buy in. Well, we had to review just to make sure that they weren't like the board members or, people of influence in the organization that might have actually, caused them to not be allowed to use the IRA for that type of transaction. And it was kind of funny because one of the guys, he had a title of vice president. Well, if you know banks, VP is kind of a dime a dozen title. Not to diminish it, but there are a lot of VPs. So, we just had to review what his real role was and, just make sure that he wasn't considered, like an insider of the bank and was able, and in this case, actually was able to use his IRA.
Okay. But if somebody is a control person, they own so much, or they're in high management, or they're president, something like that.
Something like that. And typically board members get excluded as well. But, those are, the minority of the cases.
Okay. Now, I've heard something, but I want to hear what you respond to it. And I can use my self-directed IRA to invest into a company that I own so that I can invest into other assets as long as I'm not actually receiving anything and everything goes to the IRA. Is that correct?
Well, when you say company, do you mean like an entity structure?
Let's go with an LLC.
Okay. So the answer, I guess you would say, is there's a certain amount that you say yes to, but there are conditions. So you can use the entity structure. And like you say, you can use the IRA basically to fund the entity. The thing about it is you can't manage the entity. So you've got to be passive in that entity. So basically, you've got to have, again, a non disqualified person who's managing the entity on your behalf. So again, that really just eliminates sort of an up and down family relationship. Interestingly, it doesn't eliminate side to side. So you could actually have your brother, your sister, your uncle, who would be the manager of the entity on your behalf. So it can be a family member. It just can't be mom or dad or kids.
Okay. Makes total sense. And thank you for that clarity. I've heard half right. But then the next big question, because it has come up quite a few times over the years, I have invested into this LLC that's being managed by my brother. We're buying a house. That house has debt. Can I personally guarantee the debt, plus those funds be used for the investment?
So that's where, again, you'd have to be very careful. The Generally speaking, now this is where it gets kind of tricky with the entity because really all we do is fund the entity. Once it's in the entity, pretty much a lot of different things could happen. But if the IRA is funding it, then it should be really managed under the rules of the IRA. That means that the type of loan for any debt structure should be a non recourse loan. And the important thing there, which I think you're somewhat alluding to, is there's that weird tax situation of the UBIT and the UDFI, which may come into play. Um, it would all, again, kind of, I think, hinge on how the entity is being managed as to what the outlook of that would be. So that's where, again, your team is really going to be critical. Your CPA, your attorney who helps you with the formation of the entity structure. All those kinds of things are really critical to make sure that you're doing it properly. Because even though, in this case, a company like Inspira doesn't look into the entity, once it gets funded, that's kind of where the custodian and our responsibility to the investment ends. But if you get audited, the IRS sure as heck can look through and see what's going on in that entity.
Okay. And so if I can just repeat what you're saying, make sure you're talking to your attorney. Make sure you have a CPA. Don't blame us. We have no responsibility, and that's your problem once you fund an LLC or trust or LP or otherwise.
Basically, again, that's where we're self-directed. What it means is you're the one kind of taking responsibility for it. Even though, again, in that case of the LLC, you're a passive investor, you do want to know what's going on, especially if you're funding it with your IRA money and it's a single member LLC. You are going to want to make sure you know what the LLC manager is doing. That you have a right to do.
And there are some tricks with this trade that I'm definitely not going to ask about. But I'm also going to say that hey, you syndicators that are out there, there's some strategies and structures for your investors that really can help encourage larger investments. But then there's also other concerns, especially with real estate investments. That is called the UBIT, the unrelated business income tax. And again, now all of a sudden there's a curveball, and you've got to be ready for your investors through IRAs to deal with this issue. They're going to have questions about UBIT, and you better be ready how to answer them. And Steve ain't your guy. He's already funded the investment. Make sure that you have a CPA on board, that they know and understand these rules. And if you're doing a deal and accepting IRA investors, really be prepared for that UBIT conversation, because it just happens.
Now, we can explain UBIT, but again, we can't advise on it. We do also, from time to time, we've got some referrals of CPAs. I have a list of some people that I know, but you struck on something really important, Nate. Make sure the CPA is well versed on UBIT and UDFI. I've met many smart CPAs who don't even believe me when I tell them it's a thing. So it's really important. And I don't think TurboTax is going to figure it out for you, or any of those other kinds of, you know, off the shelf services. You really want to make sure you have somebody who can help you, because the tax is offset by deductions. So it's a case of where it's not like you're just going to get this huge bill. You have a way of minimizing what the impact is. And it's really only, in a position where there's profit. So, if you're in a position where, maybe there's not profit, you may not have an issue. So, again, a lot of things to be aware of as it pertains to that tax, but get an expert.
Without a doubt. There is one more topic that I'd love to ask you about, a little bit unrelated completely to investments, but you brought up that you're doing HSAs. I know that is completely different. I've had one for a long, long time, and kind of just it's interesting the way that it works. I don't even remember what the rules are anymore, but since Inspira does support HSAs, health savings accounts, Steve, can you kind of just share a little bit about them, how they work,
Yeah.
what the benefits are?
Yeah, the HSA is probably one of the greatest inventions that has ever come about from our government. It's what you said, the health savings account. It is the only thing in the world that is truly triple tax free. You get to deduct your contribution. The earnings are tax deferred while they're in the account. And then if they are taken out for what are called qualified medical expenses, the distributions are tax free. So it's a great vehicle. If you can get growth on it over time, all the better. It can be used into retirement. Um, and, there are just a couple of things to know about it. It's always paired with a high deductible health plan. So you do have to make sure that's the kind of coverage you have in order to contribute to the HSA. Now, if you should be on a high deductible health plan and for some reason you go on to a traditional PPO, it doesn't mean you can't use the HSA money. It just means that for that period of time, you might not be able to contribute to the HSA. But again, that's your money. You keep it. It's not a case of where you have to spend it within a year like you do with those FSA accounts. It rolls over. You can retroactively reimburse yourself. So, if you are in something that's an illiquid investment, you can hold on to the expense or pay the expense out of pocket, really hold on to the receipt, and maybe in even 3 years later, reimburse yourself, as long as you've got that evidence. If the IRS comes a call, and, you want to make sure that you can verify that it was a legit distribution, but that's part of the rules too. So, that's where it really comes in handy. I mean, I think we all know the trend for a lot of medical plans is high deductible. That's what my company offers, and that's the only type of plan they offer. So we don't even get a say, as to whether or not we want, kind of that traditional plan. Uh, and personally, I don't mind. You know, think that having that high deductible or that health savings account makes it worth my while, because I know that it's something I can continue to put money into. I can grow it. beyond what I'd have to pay for myself on that annual basis. So I'm always net positive in that thing because now I'm at a point where I'm investing that money. And again, potentially I'm going to use it tax free. The cool thing about it is that when I'm 65 or older, I can take distributions for non-medical reasons. However, in those cases, you would actually be paying taxes on what you take out, just like you would a traditional IRA.
Got it. And I don't know if there's cool things about any of this stuff that we're talking about. Important, not exciting. So unbelievably important, though.
Uh, like you said, I'm weird.
I'm gonna share something personal because it's the way that I really leverage my HSA account, and I encourage absolutely anybody to do it. I have one of these super high deductible health insurance plans. I have a reasonably low cost concierge doctor for the family. We pay overall way less than we would with one of these traditional or the high cost medical insurance plans. And we just invest the savings into our HSA. And so it just continues building. It's not something that you can throw a ton of money in. There's limits in what you can put in there. But realistically, we're going to spend the money anyways. I'd much rather have it in my account and be able to grow with my investments. So oversharing, but
Yeah,
it's amazing.
you make a good point. Absolutely.
All right, well, guys. Well, if you made it this long, truly appreciate you hanging out here. And Steve, so I do not butcher your name one more time. Can you read off your email and best contact if it's by phone as well?
Sure, sure. So it is again Steve Csobaji at or Steve dot Csobaji. I want to make that clear at inspirafinancial .com. And if you need me by phone, you can get me. My office line is 630 348 8945. That's a Chicago or Chicago area prefix. I actually do live here in Dallas, but because Inspira is based right outside Chicago, we all have Chicago area codes. So don't be fooled by that.
And that is why I just happen to end up running across you at every conference around here. But not surprisingly, I keep running into you at private investment conferences like across the country.
Yeah. Oh, yeah.
My only point being for anybody that is raising capital, these guys are at almost every conference that you ever see out there. So if you don't know, now you know, and you'll probably see Steve anyways.
Exactly. We're here to help. We work with them all the time and look forward to finding new friends and new partners.
And he's a fun guy. So he could be a good friend, especially to hit up the bar after those conference days. So, all right. Well, I really appreciate everybody hanging out, listening in, and learning a little bit more. See you next time from Crowdfunding Lawyers. Bye.
Bye.